Let me ask you something real. If you passed away tomorrow, would your family be grieving? Or would they be grieving and scrambling? Because there is a difference. You see, one leaves behind pain, the other leaves behind pain and poverty. But what if we flip that? What if your demise become the first step in your family's wealth story? I want to welcome you guys back to the series on how we close the gap between Black people and other nationalities in one generation. I'm Cordell Reynolds, and today we're diving into step one, life insurance as a wealth lever. This isn't just about a policy. It's about protection. It's about securing your family and your assets. And it's about doing it while building a financial foundation that outlives you. The problem in our community is that most Black Americans are less likely to have life insurance. And even when we do, it's often not enough. See, according to LIMRA, only about 56% of Black Americans have coverage, and most of that is term insurance with no lasting value. So why don't we have insurance? Here are the top 3 reasons. Number 1, we think it's too expensive. Number 2, we don't trust the industry. And number 3, we don't know enough about the options. See, we don't think we need it, or we wait way too long to act. But here's what's at stake. Nearly 1 in 4 Black families will face a financial hardship just 1 month after a breadwinner passes away. 1 month. That's not legacy. That's survival. So you may be asking, why life insurance? And specifically, why $50,000? Well, in my protection playbook, I talk about this being your first financial defense. Life insurance is the only tool that guarantees to create tax-free money exactly when your family needs it most. And $50,000, that's just the starting part. It's not about covering your income. That is actually what term life insurance is for. The permanent policy is about leaving behind something that becomes the foundation of a wealth strategy. After funeral costs, which can roughly average about $10,000, that policy leaves somewhere between $35,000 to $40,000. And that's your family's seed capital, money that can go into a legacy fund to purchase assets or to be pooled with other family members to be able to buy property, invest in stocks, or start a business. Now I want to talk about term versus permanent protection. Your life insurance should be more than just taking away the money that you spent. Think of term insurance as a short-term protection. It can be for 10, 15, 30, even 40 years. It's like renting it. It's going to cover you during those peak expense years. And it's great for income replacement because of the low cost. And it's great while you're raising kids. It's great for paying off a mortgage. Or if you're growing a business and you need to pay off you need to be able to pay off a business partner in case something happens. That term insurance is perfect for those unique scenarios, and it should absolutely be part of your plan. I personally believe in term insurance. I believe it's incredibly valuable when it's used right. The issue is people are often told to buy term and then invest the difference. But the investing part, that part rarely happens. At least not consistently enough. Not at the rate that needs to be, actually needs to be to truly replace the income when it's needed most. Permanent insurance, on the other hand, that's your ownership play. That's the lifelong building cash value and money that you can actually access while you're still living to be part of your leverage play going forward. It's a powerful way for you to fund your retirement. It's a powerful way for you to be able to serve as your own bank. And then most importantly, it's a powerful way for you to be able to leave behind wealth without taxes or probate. Wealthy families have been using this for decades, but we're just starting to learn how to make it work for us. And this is not just protection. It's about positioning. We're going to do a little breakdown here. Here's how to break down the basic premium, okay? I'm going to teach you guys. We're going to do a quick little breakdown on how life insurance actually works. So you're going to pay a monthly premium. That premium can be a little, it can be a lot. It really depends on your budget, your needs, and the policy that you set up. At the end of your life, the policy is going to pay the death benefit when you pass away. If it's permanent, it's also going to be able to build the cash value up over time. You can borrow from it And that allows you to be able to use it while you're alive. Now, going back to the beginning, whenever you set that policy up, you're going to set up what we call a beneficiary. This is going to be the person that you designate to be able to receive the money whenever you're gone. That could be a loved one. That could be an institution. There's so many ways that you could designate that beneficiary. That money is typically tax-free and is paid out within weeks, giving your family immediate liquidity in the midst of a crisis. Let's take the Johnson family, for instance. The Johnson family has 4 siblings. Their mother passes away unexpectedly at 64 years old, but she has a $75,000 life insurance policy. Now, after funeral expenses, there's a remaining $65,000 that's going to be split into a legacy trust. Each sibling uses their share to invest in something meaningful. One starts a mobile notary business, one buys a vending machine route, one puts it towards their kids' college fund, and one bought land. Let's go back to that vending machine route real quick. That vending machine route is now generating over $1,000 a month in income. That's money that did not exist before. That one act of planning changed that family's financial story. Let's say your family receives a $40,000 permanent life insurance, and you take that money and you go put 20% down on a small business purchase. Let's say that's $8,000 on a $40,000 business. You get the remaining of that funds on an SBA-backed loan. You now have an asset that's going to be able to pay you forever, and you still have the other $36,000. Now imagine you do the same thing, but instead you go with a little bit of a larger business. You go with a $100,000 business, and you use an owner financing instead of an SBA loan. You put that same 20% down, that business nets you $2,000 a month in cash flow. 20% down on a $100,000 business. We're talking about $20,000 out of your $40,000 that you received and $24,000 a year in income. More than half of the original value of that policy. You've more than doubled that in 2 years just by being smart with how we use those funds. And this is just the start. That income can be pooled with other family members' funds, reinvested, or used to create a generational system of ownership. That's the power of a legacy fund. Some of y'all are thinking, I can't afford it. But the reality is most of us right now are spending more on streaming services and random things on Amazon or Temu. And that could cost our family the protection that we need to be able to build generational wealth. Literally for less than $50 a month, most of us could change our family story. How does this fit into the bigger picture? Life insurance is the first lever in the plan to close the wealth gap because it guarantees that every family, no matter how much you earn, has a way to start building a legacy. It creates capital, and capital is what lets us eliminate debt. It lets us invest in assets. It lets us support banks and businesses in our community. And most importantly, you can't build wealth if every generation has to start over. This one step alone ensures that your family starts ahead and not behind. I want you to take a second and really sit with this. If you're gone tomorrow, will your family be covered? Or will they be left behind with debt, confusion, and no plan? Why this step is so critical? We are all guaranteed to die. Every single one of us. But death shouldn't be the end of the story. It should be the start of something new for the next generation. And in my protection playbook, I say it clearly. Your life is the play. Insurance is the protection. Without it, you're running a risky offense with no defense. So how do you get started? We're going to talk about 4 things that I want you to do. Okay. Number 1, I want you to decide what the goal is. Is it income replacement? Is it legacy building? Or is it both? Step number 2, start with a minimum of $50,000 in permanent coverage. That's the baseline. You need to sit down with an advisor. I want you to sit down with a trusted advisor who's not just trying to make a sale, somebody who's really trying to tell you the best ways for you to be able to reach those goals that you set in step 1. And then in step 4, I want you to talk to your family about your plan. Because this is legacy. This is not a secret. We have to stop holding this information hostage and be able to share it with our family so they know exactly what the goal is. I don't want you guys to actually just watch this content. I want you to actually move. I want you to go out there and start having conversations with your family, with your friends. Pull them all together. Get that $50,000 policy in place immediately for yourself, for your parents, for your siblings. And this is just step one. It's not optional, not later. We got to do this now. We got 4 more steps that we're going to cover over the next 4 weeks. And I want to see you guys back here soon. I'm looking forward to sharing this information with you. And I want you to know that I'm always available if you need just some advice with no pushing, no sales, or any of that information. I just want to make myself available to answer those questions for you. I'm Cordell Reynolds, and this is how we close the Black wealth gap, one move at a time. Next week, we're going to break down step 2, eliminating debt. We want to make sure you subscribe, share this with someone you love, because legacy isn't built later. It starts now. Protect the play, secure the win.